Good morning, everyone. Hey, this is Rick Hoffman with LMA Trading, and welcome to what I'm going to call Turnaround Tuesday. The markets have been down all last week. We had a morning rally yesterday morning in pre-market to only be sold off at the open, where the sellers came in and pushed basically the ticks spiked big time at the open, all the way up to 14.19 at the open, which really was indicating, buyers coming in right at the open. And then they sold off, people taking profits quickly, and it sold off, and it continued to sell off and fight and rally back and fight and rally back all day long. So I'm going to kind of call the title of this video, when do I buy the dip? And is this the dip that we see that we should be buying right now? It does appear that we are finding some support at the mean on the daily charts. The market is still very, very bullish, and we are reaching some exhaustion levels. It looks to be on the Dow, and possibly on the Russell. It looks like the S&P and the Q still have a little more downside to go, when I'm looking at the charts right now, is the way I see them. But do we buy this? Is this the dip that we're wanting to buy? Actually, there's still a lot more downside. We'll get into this here a little bit when we look at the long-term charts. But so I'm going to start with the Dow as I usually do. But before I do, let's get into a little bit of housekeeping here. I am not a financial advisor, so do not take anything that I talk about here as financial advice. And I do not give financial advice. I do not send out trade alerts or anything like that. So from that standpoint, these videos are part of my trade journal, as far as part of my trade journey, as part of my education process, and to review what I see happening in the markets, what has happened, what I believe will happen. It's pre-market, for God's sake. So, it's not rocket science. And from that standpoint, at the beginning of the day, at the end of the day, I really have no clue what the markets will do, throughout the day, because they're going to do what they're going to do. I do not know what other, buyers or sellers are going to do throughout the day, and what forces may, interact on the market, and also what fundamentals and things that could happen in the world and everything. So, but before we do, let's take a look at our calendar here, because we do have, NFED, and the National Federation of Independent Business, Small Business Optimism Index coming out. There are a couple things that are happening today. And let's take a quick look at our trade calendar and see what we may have happening here today, on the 14th. There's really nothing that's indicating here, but we've got an event here on the 17th. It's quad witching, expiration of equity options and futures, and index options and futures, along with the Philadelphia SOX index rebalancing is taking place. And we also have the S&P rebalancing, S&P 500 and 400 and 600. All this is rebalancing. So, this is, I think, the biggest thing I can say here is caution should be the number one indicator that we should be going into this week, as we see this. Now, on the long-term chart, the weekly chart, we are catching some support at the 21. This is very favorable in this market. As you can see, it's happened before. And so we've got last week we had a nice pullback, where we got a little bit of a bounce here yesterday. We are in positive territory, but just barely 17 points, just barely in positive territory. We are in a weekly squeeze with decreasing momentum. We had the sell signal come in on our weekly chart. Now, when we look at the daily, we've broke below the 50, the daily 50, and we're also below the daily 21. So overall, this is a very bearish chart as of right now, as far as the daily chart is concerned. Weekly, we're still, the trend is kind of neutral right now. We do have stacked EMAs, but we have neutral stacked EMAs right now that are not stacked positively at this present time on a daily chart. So, we are getting a ready signal down here on our RAF, our ready aim fire. So indicating that possibly entering a zone of, exhaustion here on the daily, but there's still more room to the downside. And we'll see if we can pick up a little bit of momentum here. But again, there's a lot of forces at play that's putting pressure on these markets that I think will possibly play out throughout the rest of this week. So, is this the bounce that we catch? Very well could be. This could be the bounce that we're looking for, and this could be a start. What I can see happening here is the market's catching support here and beginning with the Bollinger Bands coming in, that we start, as you can see here on the weekly chart, we've got the Bollinger Bands coming in, and with the weekly squeeze, that it's going to, the weekly is going to tighten up, which is going to send us into a consolidation on the Dow to build a daily squeeze to the upside. This would be a very positive thing, possibly taking us out of September into October, and maybe a little consolidation, and to give us an explosion for the last quarter of the year. So if you haven't made your nut for this year, possibly keep an eye on this. And, I'll be watching this to really make a positive impact into the last quarter of this year. So let's take a look at the VIX right now. On the VIX, let's see there we are. The VIX has been running over 20 again, and we pushed up here to 21 the other day. We hit that again yesterday, and we hit the 20 here in pre-market, and we're pulling back. We're about at 1948 right now. I would really like to see if we can get back down to 18, or hit 18, or drop below 18. Then I would say that'll be the dip that we're looking for, and the buyers will start to step in. Up here, the buyers, I think, are just sitting on the sidelines and waiting for this to play out. So we're probably going to see some consolidation. So I'm not sure if this is the dip, but like yesterday, I said we'd be watching the VIX very, very closely. And we'll be doing the same today. A lot of times in the past, you see the volatility spikes, and the buyers step in and push the volatility back down into below 18. And that's when we saw, this is what's kept this rally alive. So just a little bit of slowing in the market, I think, is what is here. And again, gives me indication that we should be a little bit on the cautious side. The Russell surprised me yesterday. I do have a short on the Russell, and we are down a little bit on that. I put that on last week as a hedge, looking in, as a hedge on my long positions. I've since have took profits yesterday, and also closed out and put that capital back into cash. So I just have one credit spread on Amazon, and and I have the short on the Russell. So we'll see how this plays out here this morning, and we'll see if it pushes a little lower. Right now, we're just barely in the green, but anyways, as we look at this here, we are still closing below the 21. So and we are right at the daily 50. Same thing on the weekly chart. So the weekly charts are lining up. We do have a ready signal down here that, possibly on the daily, we have a green ready, which would indicate that we could be setting up here for a fire to the upside on our weekly chart, still rather neutral and flat. And then when we look at the short term here, when we look at the 4-hour chart, we are pushing or leveling off, but we do have a 4-hour squeeze that looks like it could fire to the downside. We're in a 2-hour squeeze with the momentum shooting to the upside. And we also have on our 30-minute chart, we had a buy signal here to the upside. So right now, this right here is the only thing it's looking rather bearish on the chart. So we'll see how the 2-hour and the 30 minutes and maybe even the 1-hour charts will play with the Russell here this morning when we get into the cash session. So I'll be watching this a little bit to determine what would make the most sense for us to do here with our short, whether or not we want to. It expires tomorrow, so so we're just a little bit in the red on it, but whether or not we want to let go of it, or do we hold on, and it's a 1-to-1 risk. So do we hold on and lose the money going into tomorrow, or do we hold on and maybe make a little bit of money? And we'll just wait and see on this. It's just a wait and see game, really, as of right now, the way I see it. Now, let's jump into the Qs. And with the Qs, the Qs still have more to go to the downside. Just barely on the green, about 3.75 here this morning. But it's still extremely early with a little over 3 hours to go before market opens. But the VIX, as you can see here, VIX is firing a little bit to the lower here in pre-market. So we are moving closer to the 18, to the flat line of 19, and maybe pushing lower. So that's all a positive sign as we look into that. We could see some higher movements here. But I will be watching the FANG stocks, the Googles, the Apples, and Apple's got some news. Amazon, those, we do have a credit spread on Amazon right now, and so we are looking at that to hold off here, but that, we just put that on there, just to lock in a little bit of cash there to our account on our credit spread, to maybe use that money to look at some potential buy opportunities that are beginning to set up on some other stocks that we're looking at. That may be firing to the upside when we come out of this, when we come out of Claude witching there. So again, the Qs look like they're catching some support here at the daily 21. We still have a little more to the downside because the Qs, but I look at the weekly Bollinger Bands, still rather not a whole lot of pressure on the downside on the long-term chart. So still very, very bullish. And with the stacked EMAs, we still have stacked EMAs on our daily. Again, but our trend has kind of is neutral. We do show Bollinger Bands beginning to tighten and restrict here a little bit. So again, just as with the other charts, we might be seeing this as we go through. We're finding some support here, and this is a good thing because this may have arrested the deep dive. So we may see just some chop in this market. So so again, you know. Uh, wise positions could tell me that I might be looking for some credit spreads, things like that, because if we come in the chop, looking for an area of support for us to hold support, and that's what I would be looking for here going into maybe the next between now and the end of the week. So that's how the Qs are shaping up. Let's take a look at the S&P lastly. As with the S&P, we've got a little move upward here a little bit. It looks to be where we gap down here this morning, and so we are up just a bit where we are, but the VIX is dropping. We're down to 1922, so we've dropped about 20 points or so since we started recording this video. So we may see again catching some support at the 1 ATR down here at the 44.33 and the daily 50. So we see here on the daily ATRs, you see how we've begun to curl up here on the negative. So this is giving a little bit of support here to the S&P, and the Bollinger Bands are flat. They're not tightening in, and the same thing on the on our weekly chart. The Bollinger Bands are still rather open, and but RAF signal is still to the downside. The daily is still to the downside, not showing any signs of potential exhaustion yet. But we may be catching some support here. So this will be a key level I'll be watching. If we break the key level, then we're heading down to test the daily 50. And that'll put us down here to the the 1 ATR on the weekly chart, which look at the past history, that seems to be a good level of support for the S&P. So this is kind of my game plan that I see after looking at these markets. I'm somewhat encouraged to see some support setting in yesterday and possibly today, seeing a small bounce upwards possibly. We'll see if we go much lower than the 44.50 here on the S&Ps. And I'd like to see it hold the 44.50 and to a push higher into tomorrow. And that's how I'm seeing this. When we look at the intraday chart, it looks like things are moving to the upside. We've got a 30-minute fire possibly, and we've got the 2-hour is showing movement to the upside, and our 4-hour is showing increasing momentum, putting a slow on the downside move that possibly could push us a little bit higher going into today, or at least some chop. We are in a 1 hour or 2-hour squeeze, and firing looks like to the upside right now. So I would like to see our 2-hour get above the 21, and we've got our 30-minute, which the 30-minute is currently trading at, got so many dots here, trading right at the 21. And so I'd like to see us push and get above the 21 so we can flip this to more of a uptrend here. Our Keltner channels, our 3 ATR, they look like they could be beginning to widen out. So the 30-minute ATRs, we could get some expansion there. But again, our 2-hour looks like there's some restricting going on. Same thing with 4-hour. So again, possibly looking at this to find some basing, and and to turn around and see some consolidation begin to set in. So we can see some tightening and coiling of the S&P to give us the bounce that we would really be looking for maybe coming out of this week. So setting up for possibly a nice run into next week for a nice recovery, and we'll see. And then that might pull out a pretty decent recovery out of September. So I'm going into October, but September and October typically aren't great months as far as the market. We'll see if we can buck the trend, because I know if the bulls have anything to say about it, they want to buy the dip. So is this the dip that we buy? Not real sure on that, but right now, looking like it's setting up for the markets to catch some support here, but still maybe a little more downside. We'll just see how strong these support levels are and how well they hold going into the cash session to the open, and see if we get that spike up like we saw yesterday, and where we go there. So with that being said, I wouldn't necessarily look at this and say that this is my buy the dip opportunity and start loading up on some longs. I'll be looking at some credit spreads, but I'll be looking at putting an SPX trade on today. I'm just not, I haven't determined a bias yet on that. So I'm going to wait till the cash session opens. And with right now, my signals are telling me if I was to put a credit spread, I would probably be leaning towards something to the upside, and looking at this 44.50 area as a key level of support, and if the S&Ps can hold that, and maybe playing this into tomorrow to close above the 44.50, and that's what I would be wanting to see happen. And I would probably put moderate risk, something maybe 2-3% risk on that, based on my account size, and maybe put a little bit of coin in our pocket by sometime tomorrow, looking at maybe 50-60% profit if we can get it, and then or closing it out for a small loss if we are wrong on our direction. So we'll wait and see. Right now, I'm not going to hedge this or put this into any level of big bets one way or the other, because the markets are a little flat, but at the same time, the direction is not necessarily, I think it's looking for a direction. Right now, the direction seems to be leveling off, and so possibly getting a little bit move here to the upside. But this week, with everything happening at the end of the week, just caution is my word for the day. And so that's how I'm looking at playing today. We'll you have a happy trading. Trade your own money, lose your own money. Okay, and we will catch you guys tomorrow.